Welcome back to Global Monetary Watch. Today is July 24, and we're taking a closer look at an important topic that continues to generate discussion among people following Iraq's financial developments. One question has remained at the center of many conversations. Why has the Iraqi dinar stayed close to the 1:300 exchange rate for such a long period? While some observers see this as a sign of stability, others wonder whether it reflects a temporary phase within a broader economic strategy. Rather than relying on speculation, today's discussion focuses on the available information, recent policy developments, and the financial context surrounding Iraq's monetary system. One of the most important things to understand is that major financial changes rarely begin with dramatic announcements. In many cases, the earliest signals appear in official documents, government planning, central bank statements, and legislative discussions that receive little public attention. These details may seem technical, but they often reveal how policymakers are evaluating future economic conditions. Looking carefully at these developments helps create a more balanced understanding of Iraq's financial direction without making assumptions about what may or may not happen next. The current official exchange rate traces back to the Central Bank of Iraq's decision in early 2023 to adjust the value of the dinar to approximately Rs. 300 per US dollar. At the time, officials explained that the move was designed to address challenges affecting dollar liquidity, while reducing the difference between the official exchange rate and the parallel market. The adjustment also formed part of broader efforts to improve market stability and strengthen confidence in the country's financial system. Over time, the gap between the official and unofficial markets narrowed, suggesting that several of the policy objectives were being achieved. However, economic conditions never remain unchanged forever. The circumstances that supported maintaining the current exchange rate continue to evolve as Iraq's economy adapts to new domestic and international realities. Instead of asking only why the rate remains unchanged today, many analysts are now focusing on whether the financial assumptions that supported earlier decisions are still aligned with present-day economic conditions. That question has become increasingly relevant as Iraq continues implementing reforms across its banking sector while reviewing important fiscal policies connected to long-term government planning. Another significant development attracting attention is Iraq's decision to adopt a multi-year federal budget covering the 2023 through 2025 period. This represented an important change in the country's financial planning process because previous budgets generally covered only a single fiscal year. By extending the framework across multiple years, the government established longer-term spending projections based on expected oil revenues, exchange rate assumptions, salary commitments, infrastructure projects, and social programs. Every one of these financial calculations depends on economic variables that must be reviewed periodically as market conditions change. Oil continues to play a central role in Iraq's economy, because petroleum exports remain the country's primary source of foreign currency income. Whenever international crude prices experience significant movement, Iraq's government revenues are affected as well. Lower oil prices generally reduce incoming dollar revenues, while stronger prices provide additional financial flexibility. Because of this relationship, movements in global energy markets influence budget planning, reserve management, and broader fiscal policy. For that reason, analysts continue monitoring oil trends alongside domestic economic indicators when evaluating Iraq's financial outlook. Despite fluctuations in global energy markets, Iraq's foreign currency reserves have remained comparatively resilient according to official reporting from the Central Bank of Iraq. Strong reserve levels are important because they provide monetary authorities with greater capacity to support exchange rate stability while maintaining confidence in the financial system. A healthy reserve position also reduces pressure that might otherwise arise during periods of international uncertainty. Although reserve strength alone does not determine future monetary policy decisions, it remains one of the key indicators that economists examine when assessing a country's overall financial resilience. The difference between making monetary decisions from a position of stability versus reacting to financial pressure is significant. When central banks possess adequate reserves, improving banking systems, and manageable economic conditions, Policymakers generally have greater flexibility to evaluate long-term objectives rather than responding solely to immediate challenges. This distinction has become part of the ongoing discussion surrounding Iraq's financial reforms. While no official announcement has indicated a change in exchange rate policy, the combination of budget reviews, reserve resilience, banking modernization, and continued economic reforms suggests that Iraq's monetary authorities remain focused on carefully managing the country's evolving financial framework. Attention has also turned toward ongoing discussions involving adjustments to Iraq's federal budget. These conversations are not simply about increasing or decreasing government spending. Instead, lawmakers and financial officials are reviewing how existing fiscal plans align with current economic conditions. As revenue expectations, public expenditures, and development priorities continue to evolve, policymakers are examining whether the financial assumptions used when the budget was originally prepared still reflect today's realities. Such reviews are a normal part of responsible fiscal management, especially within a multi-year budget framework that must remain adaptable to changing economic circumstances. One element receiving careful consideration during these discussions is the exchange rate assumption incorporated into government financial planning. Exchange rate figures influence nearly every aspect of the national budget, including public sector salaries, imported goods, infrastructure costs, and estimates for future government revenues. Because these assumptions affect so many areas of public finance, any review naturally attracts attention from economists and market observers. However, reviewing an assumption does not automatically indicate that a policy change is imminent. Governments routinely analyze multiple financial scenarios to ensure long-term stability before making important decisions. This distinction between confirmed information and speculation is essential. Officially, discussions regarding budget adjustments and fiscal planning are taking place, and Iraq continues implementing banking reforms aimed at improving transparency and strengthening financial oversight. The Central Bank of Iraq has also continued efforts to channel more foreign currency transactions through regulated banking institutions, while reducing reliance on unofficial markets. These developments have been publicly acknowledged through official policy initiatives. What remains uncertain is whether these ongoing reforms will eventually lead to changes in exchange rate policy, as no official timetable or commitment has been announced. Another important aspect of Iraq's financial transformation involves continued modernization of the banking sector. Authorities have introduced reforms intended to strengthen compliance with international financial standards, improve anti-money laundering procedures, and expand cooperation with global banking partners. These initiatives are designed to enhance confidence in Iraq's financial institutions, while creating a more transparent environment for domestic and international transactions. Banking reforms often require considerable time to implement, because they involve regulatory adjustments, technological upgrades, and coordination between government agencies and financial institutions. Observers are also watching developments in the broader global economy, particularly changes affecting the value of the U.S. dollar. Since Iraq's exchange rate policy remains closely connected to the dollar, international monetary conditions naturally influence the country's financial planning. Decisions made by major central banks, especially the U.S. Federal Reserve, can affect currency markets worldwide. Shifts in global interest rates, inflation trends, and capital flows may alter the economic environment in which Iraq's monetary authorities operate. While these external factors do not determine Iraqi policy independently, they form part of the wider economic landscape considered by policymakers. International organizations have consistently emphasized several long-term priorities that support Iraq's economic development. These include strengthening financial governance, encouraging greater use of the formal banking system, expanding electronic payment services, diversifying sources of economic growth beyond oil production, and improving institutional credibility. Progress in these areas is generally viewed as beneficial for economic stability regardless of future exchange rate decisions. Building stronger financial institutions creates a more resilient economy capable of responding effectively to both domestic challenges and international market fluctuations. In recent years, Iraq has reported measurable progress across several of these reform initiatives. Electronic payment systems have expanded. Banking relationships with international financial institutions have continued to develop, and authorities have worked to narrow the difference between official and parallel currency markets. Although these improvements have not eliminated every challenge, they represent ongoing structural efforts intended to modernize Iraq's financial system. Such reforms are often gradual rather than immediate, requiring sustained implementation before their full economic impact becomes visible. When viewed together, these developments provide a broader perspective on Iraq's current financial position. Budget reviews, banking modernization, reserve management, international cooperation, and institutional reforms are all interconnected components of a larger economic strategy. None of these factors alone provides a definitive answer regarding future exchange rate policy. Instead, they illustrate that Iraq continues working through a complex process of financial development. Careful observation of official announcements, verified economic data, and policy decisions remains the most reliable way to understand how the country's monetary framework continues to evolve over time. As discussions continue, several broad possibilities are often considered by economists and market observers when evaluating Iraq's monetary outlook. The first is the continuation of current policy, with the official exchange rate remaining close to its existing level while broader financial reforms continue. This scenario reflects the reality that significant monetary decisions usually require coordination between fiscal authorities, the central bank, government institutions, and the overall economic environment. Maintaining stability while reforms progress is a common approach used by many countries seeking to strengthen their financial systems before considering any major policy adjustments. A second possibility frequently discussed involves a carefully managed policy adjustment, should economic conditions and official objectives eventually support such a decision. If policymakers were ever to consider an exchange rate modification, historical experience in many countries suggests that such changes are generally preceded by extensive planning, official communication, and institutional preparation rather than occurring unexpectedly. It is important to emphasize that this remains only one potential scenario discussed by analysts. As of today, there has been no official confirmation from the Central Bank of Iraq announcing any upcoming exchange rate change. There is also another scenario that deserves equal attention because balanced analysis requires considering both positive and negative possibilities. Unexpected declines in global oil prices, regional instability, geopolitical developments, or significant external economic shocks could place additional pressure on Iraq's public finances. Since oil exports remain the country's largest source of foreign currency revenue, prolonged weakness in energy markets could reduce government income and influence future fiscal planning. Evaluating these risks alongside positive developments provides a more realistic understanding of the economic environment, rather than focusing only on optimistic outcomes. Responsible analysis means acknowledging uncertainty instead of presenting assumptions as established facts. Financial markets are influenced by a wide range of variables, including government policy, international economic conditions, commodity prices, and institutional reforms. No single indicator can accurately predict future monetary decisions on its own. Anyone claiming certainty regarding the timing or direction of future exchange rate changes is moving beyond verified information. The most reliable approach remains following official announcements, reviewing credible economic data, and recognizing that policy decisions are often made only after multiple factors align. One important takeaway from recent developments is that exchange rates are policy instruments rather than permanent values. Governments and central banks may review them whenever economic circumstances justify reassessment. This does not imply that a change is guaranteed, nor does it suggest that one is imminent. Instead, it highlights the practical reality that monetary policy evolves alongside economic conditions. Iraq's ongoing review of fiscal planning, banking modernization, and financial governance reflects a system that continues adapting to new challenges while seeking greater long-term stability. The resilience of Iraq's foreign currency reserves has remained one of the more closely monitored indicators throughout this process. Reserve strength provides policymakers with additional flexibility while supporting confidence in the country's financial position. combined with continued efforts to improve banking compliance, expand electronic payments, and strengthen relationships with international financial institutions, these developments contribute to a broader picture of institutional reform. Although each reform progresses at its own pace, together they demonstrate an ongoing effort to improve the overall effectiveness and transparency of Iraq's financial system. Budget discussions also continue to receive attention because they influence government planning across multiple sectors of the economy. Decisions involving revenue projections, public spending, infrastructure investment, and social programs require financial assumptions that remain consistent with current economic realities. As conditions change, reviewing those assumptions becomes a normal part of responsible fiscal management. Such reviews should be viewed as part of the government's planning process, rather than interpreted as confirmation of any specific monetary action. International economic conditions remain another important piece of the larger picture. Global interest rates, movements in the US dollar, energy markets, and worldwide financial trends all affect countries whose economies are closely linked to international trade and commodity exports. Iraq operates within this global environment, meaning external developments may influence domestic policy considerations alongside internal economic reforms. Understanding these connections provides valuable context for interpreting official statements and economic reports as they become available. For those following Iraq's monetary developments, patience and careful evaluation remain essential. Reliable information comes from verified government announcements, official reports, and credible economic institutions rather than rumors circulating online. Distinguishing confirmed facts from speculation helps create a more accurate understanding of Iraq's evolving financial landscape. As reforms continue across banking, fiscal policy, and institutional governance, new information will likely emerge over time, allowing observers to assess developments based on evidence rather than expectation. That brings us to the conclusion of today's discussion. The current exchange rate remains part of a broader economic framework shaped by fiscal planning, monetary policy, reserve management, banking reform, and global financial conditions. While many questions continue to be discussed, the future path of policy decisions will ultimately depend on official actions taken by Iraq's monetary and government authorities. Until then, the most valuable approach is staying informed through credible sources, following verified developments, and maintaining a balanced perspective grounded in facts rather than speculation. Thank you for watching Global Monetary Watch. We appreciate you spending your time with us today. If you found this report informative, please subscribe to our channel, give this video a like, and press the bell icon so you never miss future updates on the Iraqi Dinar, Iraq's economy, and important financial developments from around the world. We look forward to seeing you in our next report.